All right, there it goes. So we're live. So we'll give folks maybe a couple of minutes to jump on since we're going to introduce you,
Okay.
and and then after we introduce you, we'll kind of get into everything. But um, I just see our first person logged in. So tonight we're going to be talking about building wealth, how to get started with investing with our special guest Adam Koos.
Kosh, you got it.
Adam, yeah, I nailed it that time, right?
Looks nothing like it's pronounced. I know.
So we're going to talk about where you're from, um, maybe how we came across paths, but should be an interesting conversation that we for sure wanted to get up on the channel. And the reason why we're doing this live, so for everybody who's jumped into the live, please drop us a comment. Um, if you have questions concerning the topic of building wealth, getting started in investing, especially after you get to know Adam a little bit better, we want you to drop those questions in the chat, because the reason we're doing this live is because we want to talk about things that you guys are interested in, um, with our special guest who has his life's of experiences. So we got about 20 people already in here. So thank you guys for joining us. We're here to learn. We're here to build. And so let me thank our special guest, Adam Koos, who has taken his time out to talk to us about his experiences, and just make himself available to all of us to ask questions and talk about his story, and get some knowledge. Sound good?
Yeah. Thanks so much for having me. And for those of you, before I forget to say this later, I had Will on my podcast, which will be published. I don't have the date on me right now, but you get to hear his story. I'm sure you guys would like to hear more about him anyway. So we did a home and
That was
home.
a good one too, because
It was
you were
fun.
asking me, yeah, you were asking me some stuff that some thought provoking stuff, man. So I'm looking forward to seeing and hearing that podcast as
Oh
well.
yeah.
All right, so let's go ahead and get started. And again, if you just now joined us, say what's up in the chat. Let us know where you're tuned in from, and as we go ahead and ask questions in the chat, for Adam, to answer related to the topic at hand. But let's go ahead and get started. So, who is Adam Koos? So, Adam, if you'd like to introduce yourself, tell us a little bit about yourself, your upbringing, and then we'll get into some of these notes I have on, to dig a little deeper.
Sure. Yeah. No, I grew up in Lorain County, Ohio, so west of Cleveland. A lifelong Browns fan. Very, very sad Browns fan. Season ticket holder. Like throwing my money away, I guess. So we're gonna start talking about investing. Don't invest your money in Browns season tickets. Um, but I'm from Cleveland area, born and bred there. But came down to Columbus to go to Ohio State, like a lot of people do, and like a lot of people do. When I graduated, I stuck here. I love the city of Columbus. Young, growing city, lots of opportunity. 14th biggest city in the country, and growing. So I went to Ohio State. And the interesting, I think, part of my story is probably that I wasn't supposed to be in this business. I went to school to I idolized my dad growing up, and I always wanted to be a doctor like him. And he was an optometrist. But when I shadowed him one day, and I spent the whole day watching him, ask people, "Is this one better or this one? What about this one? Is this one better or this one?" I'm thinking, man, I can't do this for 14 patients a day. So I felt so bad because, again, to this day, I still idolize my dad. And at the end of the day, he's like, "What do you think?" And I'm thinking, I don't want to tell him I don't like his job, but so I went to school um, to get into medicine. I just didn't know what field I wanted to get into. So I, just started taking the medical classes that you take at, at Ohio State, things like all the calculus and chemistry and biology and biochem and zoology and things like that. And then, really long story short, I won't get into the deep long story. But essentially, I hit my senior year. I competed for Ohio State in Taekwondo, and I didn't drink in college. I was very straight and narrow. I did my fair share of partying here and there, but I didn't drink. I focused on my studying, and I focused on fighting, and then really had big goals of doing well in the sport of Taekwondo. And then unfortunately, my senior year, my last year of eligibility, I ripped my hamstring halfway off my pelvic bone and ended my fighting career, which kind of, to
Oh,
be honest with you, looking back now, it's easy to see, but I was clearly depressed. It kind of threw me off the rails. And even though I was never going to make any money in Taekwondo, and I was honestly never good enough to make, the Olympic team or even become an alternate, let alone go to the Pan Am Games. But it was a dream, it was a goal, and I've always been goal oriented. So when it didn't happen, it was almost like, now what, and it literally just threw me completely off the rails. So, just decided I didn't want to go to med school anymore. I dropped out of the pre-med program.
This is your 4th year of college?
This is my 4th year. Yeah.
Okay.
Yep. So I'd realized at this point that I wanted to do trauma surgery. That was really, I have a hard time. I get bored easily, extremely easily. I don't have a lot of patience. So I found that trauma surgery was really exciting, something new all the time. But to go to school for another 4 years for med school, then another 2 years for residency, another year for surgical fellowship, I was going to graduate, basically finish and start working at 32, and I just couldn't do it anymore. This event of taking me off that, trajectory of, no drinking, school, Taekwondo, and that's it. When that stopped, it was almost like I didn't know what to do with my time. And of course I didn't spend my time doing the right things, but it ended up being all for the good in the end. So I was walking down the street one day, Neil Avenue, called my dad up, was terrified what he was going to say. And I said, hey, I've decided I'm not going to go to med school anymore. And he's like, what are you going to do? And I'm like, man, I don't know. I was like, I really love computers, and the computers were still getting big back then in the 90s, early 2000s. And I thought maybe I'll do something with computer sales or software engineering or software sales or something like that. But I'd have to go back to school for engineering. So I just thought I'll just stick with sales. And then I thought maybe pharmaceutical sales or something like that, or medical device sales, because I knew a lot about medicine and that field. But then the idea of basically walking into doctors' offices and trying to sell them things, I didn't like that idea, because, well, you can imagine the dynamic when you wanted to be a doctor, right? So I didn't know what to do. And then my dad, he's like, what about becoming a financial advisor? And I'll never forget. I said, a what? I said, Dad, I only took one econ class in college, He goes, yeah, but he's like, you're a smart guy. You're always messing around with that virtual stock exchange account you're messing around with all the time. You're good with people. And he's like, people who are good with people are going to be better off than somebody who's just monotonous and, droning along about, numbers. So he's like, let me introduce you to my financial advisor. So I went up to Cleveland. I met his advisor. I still wasn't sure. I wasn't really sold, to be honest. And this guy said, look, we're doing a seminar down in Columbus at the Crown Plaza on Bush Boulevard, which it's still there, but it's a different hotel now. Yeah. And I walked in and I listened to this seminar, and I always joke it was like the Peanuts, like the Charlie Brown, when the teacher talks, it's like wah, 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 wah. But as soon as they said that, once you became profitable, you could have your own office and you wouldn't have some boss like, over your shoulder telling you what to do with your client's money, because that was my biggest concern with the financial industry was, some of the ethical issues that exist. And I didn't want to be on some metaphorical, when you think of financial advisors and stocks and investing, some of the first things that come to people's minds are things like the movie Boiler Room or Wall Street, or Wolf of Wall Street. And I just didn't want my life to look like that. I didn't want that, that kind of, I guess, imagery, or perception of what I did for a living. So the idea of having my own office where I could kind of dictate what I did and how I did it and do the right thing for my clients, that appealed to me. And so I gave it a shot. And now if you would have asked me a year before, or even 3 months beforehand, do you think you're going to be successful doing that? I would have laughed at you. I'd have been like, you got to be kidding me.
Now, were you still a student at that time, or you had already graduated?
Still a college student. Yeah, I'm still a college student.
Okay.
Kind of lost, had to. And when you're pre-med, by the way, you don't have a major. So I had to pick a major because, I had to finish. I had to graduate with a degree. So I'd taken a lot of psych classes. So I finished with a psych degree. I ended up getting a finance degree later. But anyway, yeah, it's, so I gave it a shot and I fell in love with it. I became extremely obsessed with, as I was telling you offline before we went live, when people ask me what's my why, like, why do I do this? I mean, part of my why is, looking at my dad's office every day, seeing his patients interact with him, how much they loved him, seeing his staff and how much they loved him. And I thought, I want that someday. And now today I have that. It's not patients, it's clients.
Right.
Staff. But the other why is saving people from bad advice, because there's no shortage of bad advice out there. So you can't save the world, you can't save everybody, but that's case in point, I guess, why I like doing stuff like this is, it's nice to kind of get the word out there to people that maybe, haven't educated themselves yet or haven't had the opportunity, because to this day, there's very few schools that give you a finance class in high school, or, how to invest, and unless you take an elective in college or something like that.
Do you see the comment there?
I did not know, but I'm reading it.
I think that's a Wolf of Wall Street reference.
A Countach, yeah. I drove it home, not a single scratch, not a scratch.
No, so okay, so let's
Funny, Mike.
dig a little deeper. So this question is more for people to relate. So what are some of the jobs that you've worked from the bottom to the top? I'll give you an example. For me, pre-college and all of that, first job cleaning up trash in the neighborhood for no pay, but they took us to Cedar Point every year.
Oh, nice.
Second job,
The best.
Daycare center. Third job, which was my first job. I was an assistant teacher at a daycare center. My first real job in high school was working at Kroger's, cleaning the floor, getting the carts, eventually being a cashier. And then I was a tutor in college. Then I did my internships. Then I got a real job, So tell us some of the jobs that you've worked before.
So before I tell my story about my first jobs, I did look it up, by the way, Will. And ironically, I don't know how this happened, but serendipitously, we're dropping your podcast, your interview, your How I Built It interview is dropping on Thursday. So it's 2 days from now. So people will be able
It's
to
gonna be a hit. You guys tune in. We got to drop the link to it.
We'll share around it. It's not published yet, but it'll be published on the Elevate Your Business podcast, and I'll send you the link when we get out. But my first job, it's funny. I think my first job, if you want to call it that, wasn't a real job. It was selling stuff for school. It was you'd have selling popcorn, and a ton of popcorn. And I always want to be the best, top seller. So I'd bust my butt to become the best seller. I remember.
Was that just a natural competitive thing, or what?
I guess I didn't know it at the time. No, I mean, I didn't. I mean, I think what it is, and I guess it's this way in this business too. And we can talk more about, the different companies I own later, but I've always wanted to be the best at what I do. But before it was more selfishly motivated. It was more about being the best because of me, or in Taekwondo, being the best because I want to be the best, fighter. I want to get first place, But when you become an adult, I think things change a little bit, and you find your purpose, And for me, my purpose was, being the best financial advisor, being the best financial planner, being the best investment manager, and doing right by my clients so that, I could, as my dad told me when I first started my business, he said, pretend like everything you do is going to be tomorrow's front page and the rest will take care of itself. So, that's kind of how I run things. But I think my first job was either selling popcorn for a contest. And then the second one, I think, was selling coupon books. Those, I think you still see them from time to time. Where,
I remember,
coupon books.
I did some of that. I did a little bit of that. Yep.
Then after that, my first real job was selling paper route. I was at 11 years old, doing a paper route. Then my brother got into tennis, and I didn't really have any interest. But once he got into it, I thought, I'll get into it too. But I had no idea how to play. And where we grew up, there was this Nike tennis camp, and it was way too much money. We couldn't afford it. But they said the guy who ran it, his name was Bob, and he said, if you guys come on the weekends to the adult camp and pick up balls, be a ball boy for the adult camps, we won't pay you, but we'll let you come to all 6 weeks of the kids camp for free. And so we did that. So I learned how to play tennis for free, basically being a ball boy for adult camps. Okay. That was another job, man. I had so many jobs. I worked at a department store called Ames. I don't even think it exists anymore. I worked at a pizza shop making pizzas, in the back.
Okay.
My fingers always smell disgusting from onions. I never thought, I hated putting the gloves on because I couldn't manipulate the toppings as well. So and instead I just end up with stinky fingers. Oh man, what else? I worked at a hotel restaurant where I was the only guy there, and as a server, and I'd serve tables like a server. God, what else did I do?
What's your favorite job
growing up?
Including what you do now.
Including what I do now. My favorite job is what I do now, hands down, easy. Yeah.
So okay, so let's transition into that. So let's talk about what you do now and what led you to exactly what you do now. So, you've talked about your college experience. You talked about becoming a financial advisor. Um, and so, what happened next? And then, what do you
What
do
happened
now?
next was, I learned how to grind because the way it worked back in those days is not like it is today. If any of you listening or watching, whether it be on this live session now, or you watch the recording, I started my career um, almost 23 years ago. I was 21 years old. I was 60 pounds lighter, so I looked like I was 16. I was going door to door, business to business, trying to get people 3 times my age to trust me with their life savings. And I started my career 10 days before the World Trade Center went down.
Ooh,
So it was a rough time to start in this industry. So, and then when I finally got people trusting me, as you could probably imagine, the market's crashing. So everybody's just losing money. So you got this 21, 22-year-old that's just losing you money. You trusted him, and you didn't, things are not going well. So that was how things started. And then, but I was a fast starter. I worked really, really hard. I always believe that, as long as you outwork everybody else, you focus on the activities instead of the outcome, then the outcome will come. And I just focused on my activities, and to this day, I have this mentor. He used to always say, it doesn't matter how many designations you have after your name. It doesn't matter how many degrees you have. If you have a bachelor's, a master's, it doesn't matter if you have all, certifications. The most important designation on the planet, at least in my business and many others, is STP. He calls it see the people. And he says the people who see the most people and talk to the most people that are the most successful. Networking, talking to people, just asking questions, not selling. I hate that word too, but educating, providing free advice. And, when the time comes and people need something, then they're probably going to, ask you for help. And even if they do it on their own, there's plenty of business out there. There's plenty of opportunity. So, but yeah, so I was a fast starter, won a bunch of awards at the national brokerage firm I started at. And, it was 2 years and 10 months in that I started my company in November 4th, 2004, when I was 25 years old. And that's kind of how this all began. And I always say I haven't worked in 23 years.
so the company. Tell us the name of your company and any specialties you have within
Sure.
and what maybe like a day in a life.
So okay, the company, the main company, the company that started it all is Libertas Wealth Management Group, and Libertas is Latin for liberty, freedom, and independence. I chose the word because I joke everything else was taken, all the URLs for every other word you'd want to use, name your wealth management firm or financial planning firm. So Libertas, I feel like that's what I provide people with is financial freedom, financial liberty, financial independence. So we named it Libertas, but let's see, day in the life. Well, I'll start with focuses. So our two niches, our two focuses are business owners who are looking to grow their companies. We usually help them with their 401k plans. We help them with their personal assets, personal investments like brokerage accounts and IRAs, Roth IRAs, things like that, college savings for their kids. But especially with their 401ks and business advisory type stuff, we help them. We do some business transition planning with owners. Which just basically means helping them, increase efficiencies, increase profits, focus on making sure that their customer concentration isn't too high, continuity planning, de-risking, getting the owner spending less time in the business so that it's more sellable, and then again helping them with eventually sell their companies, and then we manage the assets when they sell the proceeds from the sale of the business. And then the other niche would be working professionals, executives. So it doesn't really matter what kind of executive, but C-suite, D-suite, SVP, VP, other executives that are, in working America, working up the corporate ladder, that have complicated, situations. They want to figure out, when can I make work optional someday, or when am I on track to retire when I'd like to have the choice to quit working, and then, what are we going to do when we're done? What are we going to downsize? Are we going to move to another state? How often do we replace cars net after trade-in retirement? What do we spend on those cars? How often do we want to go on international trips? How often do we want to go on domestic trips? What about, long weekend road trips? We have any kids we want to pay for weddings? Do we want to do something where maybe we rent a week-long beach house for our family? All they had to do is get themselves there, and we're paying for the beach house, let's just say. Toys, well, I know we'll get to that eventually, but if you have any car habits, car problems like you and I do, Will, so things like that. So everything goes into the financial plan. And then from there, we're trying to figure out cash flow analyses. So all day long, we're meeting with people, whether it be new clients coming on board, excuse me, and we're trying to find out, are you on track to quit working? If not, where do we need to save more? How do we need to save more? Do we need to change our retirement date? Do we need to change our objectives, our goals? So there's lots of variables. And then big picture things like estate planning, so trust, wills, powers of attorney, healthcare directives, insurance planning for everything from like home and auto insurance to long-term care to life insurance, needs analyses, tax planning is a big one. And of course, investment management, so we advise on everything from insurance to estate planning to tax planning. But we don't do taxes. We don't write wills. We have attorneys that do that for us, that we know for our clients too. But so our wheelhouse is kind of playing quarterback. I always say we're like your personal CFO, where we're, if you think of it, you own the football team and we're the head coach. And then you have these other assistant coaches like attorneys, CPAs, insurance agents, and so on. And we kind of help, run your financial house, so to speak, like a personal CFO. And but that's kind of what we do all day. And then there's, of course, review meetings with current clients that have been working with us for a while, babysitting their financial plan, making sure they're staying on track, making sure we're taking advantage of any opportunities that have come up that might make sense for them in their situation and things like that.
She said something really good.
Okay.
Keyword you said, and maybe this is the first topic we get into after we talk about the cars and stuff. But financial plan.
Yep.
So let me take a note here. We're gonna get into that one. All right. So before we get into financial plan and what that means, and I love that one. So before we get into that, cars you've owned in the past and maybe currently.
Okay.
Because for those that don't know, Adam and I met through our car hobby and passion. So I'll let you take it from there.
Sure. All right. Before I share the cars that I've owned, which I'm sure I can't remember all of them, I have to disclose right up front that a lot of these cars I bought early on, I could not afford them, and I should not have bought them.
Okay.
When I say
Fair
you
enough.
have a car problem, it is a problem. And so when you so I mean, I remember my first car I ever had was a 1985 Nissan Sentra. I put like wheels on it and tinted the windows. I had 215s in the trunk. It was ridiculous.
15s in a Sentra.
Yep, I had to make a custom box to fit it in. It had to slide in sideways, And that was back in 1994. But
Okay.
then after that, I didn't really have a car for a while. I owned a DJing company for a while, so I did a lot of DJing. But had this, we called it the drive-by vehicle because it was this black Astro with no windows. But the thing wouldn't go faster than 70, and I got pulled over for speeding going 75 but it was somebody in front of me. It wasn't me, so they clocked somebody else. I swear to God. But anyway, so I had that car, and then I got to college, and I what's funny, actually, I didn't tell you this, Will. When I got to college, one of the ways I paid for my tuition was I would go down to Obetz, I would go to Grove City, I would go to Canal Fulton, Ohio, where they had the auto auctions. And I knew enough about cars like, I'm not a mechanic, but I knew enough from changing my own oil, changing my own brakes. I changed a clutch on a front wheel drive car once. That was not easy. Actually, I screwed it up the first time, took me 7 hours. Second time took me hour and a half. But I knew enough about cars where if I could start it up and listen to it, I could know if something was wrong with it. And so what I would do is I'd go to these auctions and I'd pull up an Edmunds report on every car to see what the value was, like, private party trade-in and then retail. And I would go find out, what was the maximum I would bid on these cars to make a minimum profit. And then I would go to the auctions the day before. They let you start them up. They don't let you drive them, but you could start them up. And I would go to all the cars I was interested in, and I would, cross off ones that I wasn't interested in anymore because there was something wrong with it. Cosmetic issues were no big deal, but obviously engine issues were a problem. And then the next day I would go to the auction and I'd have this number there and I would bid on these cars. I'd buy them and then I'd sell them. If there was some cosmetic work I needed to do. So I had a lot of cars just doing that, but I wouldn't call them cars I actually owned, right? I was
You were flipping them.
Just flipping them, yeah.
That's game for everybody. I don't know if anybody's paying attention. He just put you on game.
You can still do it today.
Hustle. I love it. I know people that have done that. I know a lot of people that have done that. And if I didn't choose the career path that I chose, I probably would have been doing that too.
Yeah.
For sure.
Yep,
with
you
my
can do
car
that.
hobby.
And if you get a license, which I don't know that it's all that difficult. I never did it myself, but you can then
Not
go to
difficult.
lease auctions, the dealer auctions, and get cars
Mhm.
off lease, which is probably another benefit. But probably gets a little bit involved at that point. But anyway, so man, I had all kinds of cars that nobody cares about through that process. And then I remember my first car I was really proud of. I bought it on eBay. I
Okay.
bought it on eBay, flew down to New Orleans and one way and picked up this 1998 convertible Mitsubishi Eclipse Spider,
Okay.
silver with gold, or I'm sorry, with silver, like chrome polished wheels. It was awesome. I
So there was
loved it.
two Eclipses. There was the turbo and then there was a non-turbo, right?
It was the non-turbo. I wish it was
Okay.
the turbo. It wasn't. Yeah,
Okay. Okay.
I was
Okay.
on the cheap. I bought it for $11,000. So and then let's see. After that, let's see. I think I had no. Yeah, then started the craziness. You remember Swap-A-Lease?
Yes.
Swap-A-Lease.com?
Yes.
So for those that don't know what Swap-A-Lease, it still exists. It just doesn't work anymore. Doesn't work in the buyer's favor anymore. But it used to be that, especially during the economic crisis in 2000, 2001, 2002, and then again in 2007, 8, and 9, people they put these huge down payments on their leases, which makes no sense, by the way. And then they'd have this they wanted a smaller payment. So they put a big down payment. So they have a small payment on the lease. And then all of a sudden something would happen. They lose their job and they can't afford the car anymore. So they need somebody to take it off their hands. So in most cases, you could take the payment off their hands and you don't have to make the down payment. You just assume the lease through the remainder of the lease. And then in other situations, they'd want to get rid of it so bad, they would give you $1,000, $2,000, $5,000 to
Hmm.
take the lease off their hands because they couldn't afford the payments anymore. So I did a
Hmm.
lot of that where I was just taking over leases. I had a Infiniti M45, which was fun. The technology was terrible, but it was a fun car. I had a BMW 330i Sport.
Okay.
That was when I realized BMWs truly are the ultimate driving machine for a nice, good vehicle. But
Was it one experience? Because I have one where I realized that too.
it was, yeah, I had this car for a year and a half, and I'm driving up to Cleveland, and I got off the highway because it was traffic, and I've got this person who's going really, really slow in front of me, and I'm not that aggressive of a driver. I like accelerating to speed and then hitting cruise, so I
Yeah.
like the acceleration. I like the torque,
Yeah. Me too. Me too.
but I'm not crazy. Like I don't drive cars like some of these crazy people do. You see on the highway. Honestly, it's not that I have control. I'm just too chicken shit. So it's this car's in front of me going so slow, and there's hills and turns, and finally I get to this straightaway where I can get around them, and I floor it, and the thing just, I mean, I'd never tested it like that before, and I had it for a year and a half. This thing went around. I passed this person so fast. I got done and literally said out loud to myself and by myself in the car, I'm like, whew, whoa, and like I couldn't believe how fast it moved. So it was like
That was your first time
first
getting
time.
into it. All right,
Yep.
so here's my story because I had the same realization and I had a very similar car. I had a 335
Oh, okay, yeah.
CI.
What was
I had the coupe.
it, a 08, 09?
So, '07 or '08,
Was it
one of those.
okay.
So mine was kind of an old-ish moment.
Uh-oh.
All on Broad Street out east. It was so we're in Columbus, Ohio. The day before it snowed, so there was some kind of like wet snow, probably about 6 inches of snow on my car. So I'm a little impatient. I got the snow off my front window, the side windows, and I'm saying to myself, the rear window, I'm going to turn on the defroster. I'm going to let it melt, and it'll just slide off. So I'm coming down the street in the CI in wet,
Oh, you're a CI.
kind of slushy weather, and I'm like, okay, I had my defroster on for a minute. I'm going to come around this curve hot, and it's going to fly off the back of my window. So what happened was I came around the curve and I drifted like a professional race car driver around the curve, not intentionally, but the car drifted so predictably that I didn't get scared. Normally in a
Oh,
situation
really?
like that, I'm like, oh crap, In this situation, it went so smooth that it didn't scare me. And as soon as I got around the corner, it came right back out. And I was like, okay, now I understand why they say BMWs are like the ultimate driving machine. So that was my little
I was gonna say it would
BMW
have been
story.
nice to see a dash cam footage of that, but because I thought for sure you'd be freaking out, yeah, that's the best part of the story is that you felt
Yeah,
in control.
nah, the car was so balanced and stuff, man. But speaking of dash cam footage, I wrecked my M4 I hit a deer, and I
Yeah.
think my it has recording turned on, so
Mhm.
I think I might actually have footage of that, which is
That'd be
crazy.
fun.
Which yeah, that's gonna be interesting. But okay,
Yeah.
back to your cars. Let's
No,
let's
you're good.
let's let's get
Okay,
get
let's
to
see,
that.
where was I? M45, BM330i, had a couple Lexuses, nothing too exciting, just my wife, but it got to a point, I got married, we were talking about starting to get ready to have kids, and she's like, "Look, you're getting a new car every year. This is ridiculous. Like, we need to settle down, get a house, and figure out where we're gonna plan our family." So it's funny, I was like, "What can I buy that I could keep for a long time and that I would actually appreciate, that I thought looked cool enough, but was also luxurious enough to drive year round?" And I ended up buying this Lexus GS 300, which
Okay.
to this day, it's still a timeless car. Like, you see them around from time to time, the older ones. I had
Mhm.
an '06, and I've never bought a new car, by the way. I've always bought used cars, but yeah, I bought it like 3 years old, and I kept it for a really long time. And then that thing, I remember I was driving down 33 one day, going on a date night with my wife, and she's like, "What's that smell?" I'm like, what?" And she's like, "No." She's like, It smells." She's like, "What is that?" I'm like, "That's exhaust." She goes, "Babe, I had 2 friends that died in high school because they had exhaust coming into the car." I'm like, "Well, there's an exhaust leak, and I need to get it fixed, but the car's not worth what the exhaust would cost." So I was just kinda like trying to punt. So anyway, that was the Lexus. Then I got another GS for a little while. I was really upset because I wanted to start my real car habit, like start having real fun after I got rid of that first black GS, and I replaced the exhaust on it with some really really crappy kind of. I mean, it was new, but it was not OEM parts. And within 1 year, it was leaking again. So it was like $4,000 for the exhaust. Car wasn't worth $4,000. So I got another Lexus GS for a little bit, and then after that, um, oh man, what was next? Um, God, I feel like I'm missing one in there. But
I
anyway,
can I
then I
couldn't even
started
tell
having,
you all the
yeah, I know I'm missing at least 1 or 2 in there because they just started getting more and more fun. Um, and I got the most recent 2, I can remember that because there's a short gap in there where I was having more fun and getting some nicer stuff, but the most recent couple were a 911 turbo, which was I've never been a big Porsche guy, but if I got one, I always said I would get either a 911 turbo or a GT3. So I got the 911 turbo. It was fun. It didn't have that torque, it didn't have that off the line that I personally like. But obviously, when you hit about 4,000 RPMs, it's off to the races. Pretty crazy, kind of scary actually. So I had that for a little while, and then the dream car came, the one that was the centerfold that I had on the back of on my room above my headboard, when I was a kid, from Car and Driver magazine, which was the Viper. So
Yeah,
Gen 5 Viper. I'd been looking for a couple of years for the right one for the right price. Adrenaline red with carbon fiber lip spoiler, sidewinder, gray wheels, black interior,
nice.
multi-vented hood. And when I found it, this is the crazy irony. Everyone I found was too much money. It was just absurd. And then when all of a sudden this one pops up, I'm thinking there's got to be something wrong with it because it's less expensive than any of the others I'd seen. And so I'm thinking, where is this place? And I had an appointment set up with a client. And then he calls and says he's got to reschedule. And so I'm thinking, I'm done at 3:30 today. I guess I should check this car out. So I figured I'd call them, and they're going to be in California, Texas. They're at Toy Barn. Cars at Toy Barn. Go figure. 3 miles from my office.
Yeah.
Go down there, and I'm like looking around it, and the sales guy says, "We just got it in," and he says, "So what do you think?" And I'm like, "I'm trying to figure out what's wrong with it. Why I shouldn't buy it." He goes, "Well, So next thing you know, I got it inspected and and it was honestly, it's like it's more fun not more fun. It's so fun to dream about something for so long, and then I never thought I could afford it. I never thought in a million years I'd be able to afford something like that, let alone the Porsche. So when I pulled the trigger, I was terrified. I was real scared to spend that kind of money on something. So yeah, got that, and then unfortunately, kind of a sad story, but I lost my brother almost 7 years ago, and part of the other car thing that I'm doing right now is he was a mechanic and he was restoring a 1970 Bronco. So we've been working on it. My mechanic's been working on it for 2.5 years. So it's going to be a lava orange with black wheels, black grill, black hardtop, black handles,
Classic.
black mirrors, and then it's going to have like caramel brown diamond stitch interior, head
So
door panels, and like a darker brown carpeting, and it's going to be a lot of fun. So that should be done in September. So that's right now. That's what I'm doing. We'll see. I've got goals. I've got plans for my
Dope.
next one that I want to get. I'll probably never sell the Viper, but I have a list of the next one and the one after that.
So how long have you had the Viper?
Just under a year is all.
Okay, so that's what I thought. So when I met you, you had the Porsche.
Yep. Mm-hmm.
That's what I thought. That's
Yep.
what I thought. Because when we talked, you mentioned the Viper, but I had in my mind Porsche.
Isn't that ridiculous? This is what car people do. They have a nice
Yeah,
car. They
yeah. I
think
remember people definitely. I definitely remember people by cars. Now I know I've got Porsche in my mind. Okay, perfect.
Yep.
So I'm not crazy.
No, not at all. No.
All right, cool. So, all right. So speaking of cars, my channel is mostly about cars and aspirational. I kind of justify having a YouTube channel, or justify my car hobby by having a YouTube channel
Sure.
and sharing, the steps that you can take to get to your dreams, whether it's cars or houses or taking care of your family or whatever it might be. There's certain steps you have to take, which is why I made a note when you mentioned financial plan. So can you talk to us about what is a financial plan? Why should folks have a financial plan, and how that evolves over, where you are in life? So you might be graduating from high school, but you have these aspirations. You might be in college or just graduating, you got a job or whatever. You got aspirations. You might be 40 years old and established, but you still have aspirations. Maybe you want to retire and be financially free. Talk to us about a financial plan, what that is, and how you can leverage that.
Sure. Yeah, it's so fun fact, the average person starts their own financial planning at 52. Isn't that disgusting? How late that
That's
is?
Unfortunately, I believe it.
It's true though. The average person, and you start looking at average 401k balances, it's really bad. It's really, really low. It's depressing. So a financial plan is essentially a written, not literally on paper, carbon paper, but on a computer, of course. It's a written plan to get your financial house in order, from everything from cash flow to when you like to have the choice to quit working, to how much money you need to make in retirement in order to support your lifestyle that you want to have, where you want to live, the things you want to do, the places you want to go, and who you want to do it with, the things you want to do for others, whether that be people or things or charities. So the plan, it's as the saying goes, what was his name? I probably couldn't say his name anyway. It's French, but he says a dream without a plan is just a wish. And not to go in reverse here, but it's when you talk about cars and the channels about cars and what people, how they go about getting those cars in their life, if that's a dream of theirs, it's really interesting. And I know this is going to resonate with everybody, but obviously with your audience it definitely will. But for me, that's like I've always joked, I don't care if the house burns down as long as the car's not in the garage. So it's like, for me, and somebody, who was this Emma? Somebody said something about watches and cars, and those are my habits. Yeah,
Mike.
I'm sorry, Mike Lewis. Mike said that. So it's I don't really need a whole lot, and the things I want, it's just a couple things. Yeah, they're pretty expensive, but there is something about that the car being the goal, and for me, that's what it was. It was like, like I don't really at this point in my life, I don't really want anything else. Like as long as I have something fun to drive, and some people might think that's absolutely ridiculous, but that's what I was shooting for my whole career. While obviously my why was saving clients from bad advice and providing them with top-notch, elite, high touch, fiduciary driven advice. What I got out of it at the end of the day was, I wanted someday to be able to get, some cars that I wanted, material things, I guess, if of that. But obviously the bigger things were taking care of your family, raising your kids right, things like that, of course. But the financial plan, so head back to where we were going, is just all about putting together a plan that works for you. And everybody's different. Everybody has different goals. Everybody has different aspirations. And some of this plan, if you're entrepreneurial in nature, some of this planning comes into, starting a business or how to move forward in your career. I was talking to a client today. He's looking to buy an insurance company between $200,000 and $5 million in premiums per year. Called a couple people, found a guy that knows somebody selling a company for 5 million premiums a year. That's perfect. I'm connecting the two of them. Hopefully they can make that deal happen. Right. But there's other things you can help. Like I've helped people with, even though this is not what I do, this is like more pro bono work. I've helped people with like, networking. If you go to LinkedIn, find people, as long as we can get along and you seem like a trustworthy person, I like making connections and helping people connect, because networking is so huge these days. I remember telling this friend of mine once who he's having a hard time getting a job, and he's like, man, I feel like I apply everywhere, I can't get a job, nobody calls me back, and or nobody calls me, I can't get an interview. And I asked him, after listening for 15 minutes while going for a walk around the neighborhood, I said, what is it that you could be doing less than what you're doing right now to get this job? And he was confused, and he said, well, what do you mean? Like, and I said, well, what could you be doing less than what you're doing? And he goes, well, I guess nothing. I'm like, exactly. So it's like, if you could be doing nothing, if there's nothing less you could be doing, you're not doing enough, right? All you're doing is applying online. Like, good luck. I mean, because so is everybody else, right? You got to set yourself out from the crowd. So, so I don't know. I think I'm kind of going off the rails here, but the financial plan is all about figuring out how to reach your goals, whether that be something before retirement, like buying a car, buying a house, paying for a wedding if you're young, paying for your kids' college if you're middle age, and of course retirement. Making work optional someday, as I like to call it.
So, so I imagine a financial plan could look different for someone, obviously at different stages they are in life, right?
Mm-hmm.
So is that something that you do on a daily basis, or I guess on a client by client basis, that you're helping them with their financial plans?
Yeah, I mean, we're building the plans with them, and oftentimes it's sometimes, I don't want to say it's like pulling teeth, but we often will get people, when we come in, as we start asking the questions, a lot of the answers is I don't know, because they have never thought about some of these questions, and I think sometimes they don't want to answer the questions because they haven't thought about it and they don't really know. So but we have to plan for something, right? You can't just say, nobody ever successful in life, doesn't matter what you do, just went to work and hoped it would happen, whatever it is. And so, hope is not a strategy. At least it's not one that I've seen the work.
Right.
but I'll give you two examples, because you kind of mentioned earlier, if you're 18 years old, go to college or not, doesn't make a difference.
Right.
If you're 18 and you want to, well, I'm going to do this backwards. If you're 28, we'll say
this is going to be a good clip right here.
30. If you're 30 years old,
okay,
and you save nothing for retirement yet,
okay,
and you want to retire at 60, and you manage to start getting your budget in order, finding places where you could save for yourself, and you put away $1,000 a month total between your 401k, Roth IRA, brokerage accounts, savings, whatever, and you average 6% per year, and you start with nothing. At 60 years of age, you have 1.9 million, which means that in addition to your Social Security, you could pretty simply pull out roughly, I'll say, $50,000 to $60,000 a year to supplement your Social Security, which means you'd make somewhere in the ballpark of probably $80,000 to $100,000 a year net at the end of the day. But here's the clicker. So that's 30 years, right? That's 30 years old, retiring at 60, $2,000 a month, right? Now, if I take that and I say, what if I'm 18? Okay. So I'm 18 years old. I want to retire at 60. If I put away half as much, $1,000 a month, that extra time means I have 2.1 million at 60. So I have more money saving less using time. And that's the power of financial planning. And it's also the power of starting early, which there's not a single client. We have 290 retail clients, which means individuals, couples, non-business owners, another 50, 60 owners we work with, companies. And there's not a single client who's ever been in my office ever who hasn't said to me, I wish I would have started earlier.
All right. So that was, you actually beat me to the punch on my next question, which is, when should someone start? It was kind of
16,
rhetoric,
12.
right?
My 10-year-old, I've got 3 screens here, and he's always seeing me mess around with stock charts and my research, because I'm a market technician, so I do a lot of charting. And he asks a lot of questions, and he already wants to invest in stocks. He's 10, and this is my younger son. So when should you start? 10 is fine.
All right. So it's never too early to start. planning your finances, and creating a financial plan. But what kind of my translation of what I heard you say is, with that financial plan, you can kind of reverse engineer getting to where you want to be when you're six, whatever the age might be. So like if you wanted
Exactly what
to
we do.
be financially free at 60,
55, whatever.
you can look at where you're at now and then engineer, okay, well, this is what you're going to have to do. Now, so let me ask you this: in that financial planning that you might do with the client, does that include, you mentioned like how much money they could save and invest, right?
Mhm.
But does it include other things that they could do? Um,
No.
like let's say
Go
it
ahead,
doesn't.
sorry. No, I'm just thinking I was trying to keep it simple. I'm just saying put money into into the stock market.
Mhm.
The 2000s and 2010s. So the last 2 decades have been the worst 2 decades for the stock market in US history. Best 2 decades were 80s and 90s. I have no idea what the next 2 decades are going to look like, but if you put all your money in the S&P 500 the last 20 years from 2000 to 2020, then you averaged about 6% per year.
Okay.
But I'd like to think we get more than that at some point, but no. And I think I know where you're going with this. But another thing we do advise clients on, and I'm just going to say it backwards. I don't know a single ultra wealthy person that doesn't own real estate. So, yes, you need to. I think that if real estate is something you want to do, you got to do it smartly. You can't just haphazardly jump into it and get excited. I think sometimes people get too excited and then they do it the wrong way. They buy at the wrong time. They buy with the wrong kind of debt. They just financially don't do it the right way, and then they find themselves upside down. But but anyway, sorry, I didn't mean to take over.
No, no, so, and I wasn't trying to angle towards real estate, but what I'm trying to do is make the case for a financial plan and to understand how inclusive that is. If someone said, okay, I know where I want to be when I'm 50 or when I'm 60.
Mhm.
Because actually, to be honest with you, a lot of people, the younger people that watch my channel, they want to know how they can get out of the game when they're 30. You know what I'm saying?
Sure.
Right. Or they might want to, but maybe that ends up being a productive conversation
Mhm.
where, okay, you want to get out of the game. You're 17 right now, and you want to be retired and have your Lambo and stuff by the time you're 30. All right, let's have a realistic conversation of what that looks like, how
Mhm.
much money you actually have to make. And so my question is, you're going to invest, right? You're going to invest, but you got to have income coming in to it to be able to invest. So what other kind of things go into that financial plan to make some of these things a reality, or at least what that conversation might look like?
Yeah, when we're talking about exotic cars, you've got to have a really good job that makes good money, or you probably have to start a business of some sort. You have to be an entrepreneur. It's really hard, I think, that unless you're an executive at a company and working your way up the corporate ladder and becoming a leader, a thought leader in the industry, or if you're a physician, a top attorney, you've seen the statistics. But when you look at where all the wealth is concentrated in the world and in the United States, all the wealth is concentrated amongst business owners. And that's where most of the wealth is. So, most of these people, if you want to retire if somebody said to me, "Hey, I don't know what to do, but if I had a blank slate and I'd like to be driving a Huracan Evo by the time
Mhm,
I'm 30 and I'm 17 today,
mhm.
and I want to be done working and I'd like to have some income producing assets that pay my bills, plus maybe some brokerage assets that help pay the bills as well. How do I do it?" I mean, I'm probably going to tell them that they need to start a business doing something that they're passionate about. I'm a firm believer in that if you don't like it, you're not going to be good at it. But if you love it, you have no choice to be good at it, as long as you've got good work ethic, of course. I mean, nothing's going to help you if you're lazy. I mean, it's just how it is. I mean, but if you want to quit working in 13 years and drive a $250,000 car, you probably want something else to drive in the winter in Ohio, by the way. But you're going to have to do something, obviously, that produces a high level of income so that you can make a lot of money, so you can save a lot
Right,
of money, so
right.
that you can also invest in, whether that be the markets, whether that's stocks, commodities, what have you, crypto, or invest in real estate, income producing assets that pay for themselves, so that eventually as those assets appreciate in value, they can produce income for you. You can leverage yourself.
You know what I love about the whole conversation about having a financial plan
Hmm.
is that it forces people to think about where they want to be in the future,
Mm-hmm.
right? Because a lot of people, they don't have a financial plan because they're not even thinking about what their goals are and where they want to be in the future.
Nope.
But if you think about, okay, you know what, I want to retire at 30, or I want to retire at 40, or I want to retire whatever. Okay, so it forces you to say, okay, if you really want that. So my favorite saying is figure out what you want and act accordingly,
Mm-hmm.
right? So once you figured out what you want, the act accordingly is like the financial plan.
Yep.
So you gotta, okay, so how are you gonna act if you want to achieve that? So here's the plan.
I
So
love that quote.
I love that about what you do. And so I guess my next question is, um who are some of the what are the client profiles that you work with? Like if somebody came to you and said, hey, I want to start working with you and do my financial plan and start doing the right things. What are some of the types of clients you work with?
Sure. I mean, primarily, if you look at our whole client base, most of them are either business owners or what I call working professionals, so career executives.
Okay, that's
That being
right.
said, that doesn't mean we don't work with other people. We have a very, very, very successful um, young client coming on board right now who's 20, and he is going to end up being our biggest client. Um,
Say
uh,
that again for everybody that maybe
yeah,
didn't hear that. Say that again, please.
he's 20 years old, and he is going to end up being our biggest client probably, if assuming we end up deciding to work together,
That's
which we've
pretty
got
dope.
one more meeting. Yeah,
That's pretty dope.
very fortunate, and
So
he
the
did
thing,
it investing.
he did it investing.
He did it investing in. He did it by investing in some pretty speculative investments. He started with just $5,000, and over 2 years, even though most of the growth happened recently, but over the last 2 years, from 18 to 20, he multiplied it to a very, very large sum, to the point where he's terrified now because he's concerned about obviously losing it at this juncture.
Okay, perfect time to talk to you, right? Love it, man. Okay, so let's dig a little bit deeper into the investment. So, title of this live is "Building Wealth: How to Get Started Investing." So, if someone came to you and said, "I want to start investing. I have some goals, of course, financial planning.
Yep.
Um, what would be some advice you might give?" And maybe you can. This is kind of like the doorway to start talking about your areas of expertise when it comes to investing.
Mhm.
But coupled in with any advice you might give someone on steps to take when they're ready to start investing.
Yeah, sure. I mean, the advice can be all over the place. And again, it's kind of like when I said I wanted to get into trauma surgery because every day is different. The situations are different. Sometimes there's a big emergency. Sometimes it's not an emergency at all. Not to be morbid, but sometimes they're dead on arrival. It's like some people you can't help them because they can't help themselves. So the advice is all over the place. But I would say everything starts with that. Starts with a plan. No matter who comes to us, we will not work with them if they don't do a financial plan. And we don't. And by the way, our minimum is a 500,000 for what's called full service clients, which means that we would just charge a percentage of the assets that we manage for them. That's how we get paid. But if somebody's below our minimum, we just charge $4,000 for the plan, and they get the exact same plan that a $5 million client would, but just no investment management. We're going to tell them where to invest it, how to invest it. We're going to give them specific recommendations, but they have to do it on their own until they get close to a 500,000. But anyway, the no matter who comes in the office, whatever they want to do, no matter how old they are, we have to do the plan because everything starts with that plan. It's just like you said. I love when you said, I've never said it that way, but when you said reverse engineering, that's exactly what I'm doing. I mean, at our office, that's what we're doing is we're taking what people where they are today, where they want to be, and then we're like, how do we get there? How do we what levers do we need to pull, and where do we need to save, and how do we need to save, and what type of accounts and what tax treatments, how much, and what do we need to tweak to get you there on time? And then sometimes there's some um, come to Jesus talks like we had a client that we don't have anymore. Frankly, he's no longer a client, and when we did his plan, and this is an interesting story. I kind of forgot about this. Is he said to me, so this year I'm going to save. Just an example. I'm pontificating here, but on what exactly he said. But he said, generally speaking, this year I'm going to save $24,000, and next year, because of my income and how well I'm doing, I'm going to double my income next year. And so next year I'm going to save 48,000, and the next year after that I'm going to double that. And so we got to the point where it was like year 5 and he's saving 170,000. And I'm thinking here going, wait, well, hold on. Let's pause for a second. You honestly really think that you're going to be able to double your income working for this company? And it was a startup company at the time. And that you're going to continue doubling it and continue doubling it until you're saving $300,000. And this guy he's so jacked up and he's so excited, and he's, there's no talking him down off the ledge. I mean, he's just on cloud 9, talking about how much he's going to save. And his plan looked gorgeous, right? I mean, his plan looked beautiful. He was going to be able to quit earlier than he thought. But the problem is he's got to save the money. So when I say come to Jesus talks, I think sometimes people, they say they're spending this, but they spend more. Or they say they're going to save this, but they save much less. You know what I mean? So a lot of this is not only figuring out what do you want, what do you need, what do you want out of your life, how do you want to live, and then how do we get there? But it's a matter of how what's realistic, and I don't, and some people might think that's like shooting down dreams, because it might sound like it has a negative connotation. But whatever it is you want to do, if you're in a position where you have a job and the ceiling is $90,000 a year and you can't make more than that, if you want to retire at 35 and drive an Evo, then it's going to be a struggle. At least you're not going to be retired for very long, probably. So we need to come up with strategies for the biggest. Here's an analogy. I always like to say that whether it's real estate, whether it's stocks, whether it's commodities, crypto, it doesn't make a difference. All of these markets, from real estate to stocks and everything in between, is like in a marathon, running a marathon, it's like the wind and an elevation. So if the real estate market's going up, the stock market's going up, the economy's doing well, when you're in a marathon, it's like having the wind at your back. And it can be a 5-mile-an-hour breeze, call it a 5% rate of return, right? And it feels good. And but when you start getting that 5-mile-an-hour breeze or a 10-mile-an-hour breeze in your face, it's no fun. And then you start a 4% incline, 5% incline, all of a sudden it sucks, right? It's terrible. So I always say that at least 70% of your success in financially in your life is how much you are saving for yourself and how much you're investing, which is like putting one foot in front of the other. So in other words, if you sit at the starting line and of this marathon of life, and you expect the wind, being the market, the markets like real estate, stocks, to get you to the finish line without putting your foot in front of another, I mean, you might as well, join the 0.0 race they do downtown Columbus, where the first 100 finishers get a medal for going nowhere, and then sponsored by Patron, you can drink afterwards or something like that. But anyway, so yeah, it's awesome. I know I sound redundant here, but it really does come down to that plan and reverse engineering everything to figure out what do you want to do, and then from there, how do you want to get there? Some people have to pivot. Some people who've been doing the same thing for, say, 5 years, 10 years, 15 years, they realize, I'm not going to be able to have what I want. I've got to change jobs. I've got to do something different. I've got to start a business, and that happens sometimes.
So let me ask you this. This is a hot topic on my channel, and I don't pretend to be an expert, but I'm sure you've seen some things based on some of the clients you may have worked with. What's your take on the stock market versus crypto?
Sure. So that's a big topic, by the way. I think you're making a mistake if you start picking winners between stocks and crypto, just like you're making a mistake if you're picking a winner between real estate and stocks. I think that as soon as you start saying, you ever heard of Annie Duke, the author? She was a World Poker Tour champion. She wrote this book called Thinking in Bets. And the whole premise of the book, you don't have to read the book now. I'm going to tell you what the point of the book. The point of the book is, it doesn't matter whether you're talking to your mom and your dad, you're talking to your spouse, your girlfriend, your boyfriend, your sister, your brother, your friends, your clients. It doesn't make a difference. Whatever decision you make, whatever your opinion is, don't make it black and white. Think in probabilities. Instead of if somebody says to me, what do you think is better, stocks or crypto? My first question, well, I'm not going to answer it, right? The first thing I would say is, over what time frame? right? Like
Hmm.
from now until 20 years from now, I have no idea. From now until the end of the year, mm, I could tell you that what I think about Bitcoin and Ethereum right now, looking at a chart and what the probabilities are. But I'm not going to say that stocks are better than crypto or crypto is better than stocks. I think that you probably want to own both. I think you want
Got
to
you.
own real
Got you.
estate too. So
Got you.
right now, crypto, Bitcoin. I'll just talk Bitcoin, Ethereum. Right now, Bitcoin and Ethereum digital assets are reach. They've reached a point where they've hit a ceiling of resistance. They've pulled back. Call it profit taking. It doesn't really matter why they've pulled back. And now it's just we just had another halving right in Bitcoin, and so at this point, it would not shock me a bit to see this thing to see Bitcoin go up again. I'm going to pull up a chart but while I'm talking here.
Okay.
But let's see.
Do you
Go ahead.
also,
Sorry.
while you're pulling that up, I saw a question from Emma Boost about building wealth in raw materials like gold
Yeah,
and silver, stuff like that.
sure. No, that's a good question. Gold had been doing nothing for years. In 4 years, did nothing but go up to a price point we'll call X, pull back, 20%, 30%, hit X again, pull back 20, 30%, hit X again, and nobody made any money. It just, but you've got, and again, this is, I think, one of the biggest mistakes people make in investing is they get married to their investments. They treat it like it's, they treat it like it's their favorite politician. You know, it's just an investment. One of my
Right.
good friends, and another fellow market technician, he's always saying they're just stocks. They're not companies.
Right.
Who cares what they do? Are they going up? Yes, I want to own it then. Are they going down? I don't want to own it. It's pretty simple. One of my other mentors said you should be able to take your hand, and I don't care if it's stocks, bonds, currencies, commodities, crypto, put your hand over the name of the chart. So the name of what the investment is. And if it's trending up with good momentum and volume, you can own it. But if it's
Got
not, so if you look at a great chart and it happens to be cotton, coffee, you know, the Australian dollar, the
you. Hmm.
Swedish krona, it might be a weird sounding investment, but if it's a good investment to own, perhaps you should own it, right? We need to, I think as humans, we need to try and not allow ourselves to be pushed and into having biases about things just because it's like our team, it's our politician. It doesn't matter what they say, I'm following them. I like crypto, I like Bitcoin, and everything else sucks. The US dollar is going to crash. Well, meanwhile, the US dollar is at all-time highs, by the way, or near all-time highs. So while
Oh
you've
wow.
been preaching about, not you, but while people have been preaching about
Hmm.
how crappy the US dollar is, you know, it's doing pretty it's been doing pretty well, which by the
Back.
way, it's why gold's been struggling. Interest rates go up, gold struggles. Dollar goes up, gold struggles. You got me
Love
all
it.
up now.
All right, so we've been on for an hour and 3 minutes. I don't want to take your entire evening,
Fine.
but but
I'm having fun.
maybe how about 10
We have a part
minutes
two.
of Q&A? How about that before we
Sure,
go?
that's fine. Yeah.
All right,
We do a
so
part two sometime.
would love to. All right, so if you guys have questions for Adam, whether that's about investing, whether that's about working with a financial advisor, why you might want to do that, considering Adam's background as a finance professional, owning his own business, doing so, feel free to drop those questions in the chat. We'll take up to 10 minutes, and then but before we do that, and as those questions are coming in, Adam, let's talk about your business, and if people want to follow you or stay connected to you, let us know about how they can do that.
Sure. The financial advisory site, the website is libertaswealth.com. So it's like liberty with an AS at the end. So it's libertaswealth.com. That's the first place you could go. The business advisory side of the business is elevateandexit.com. So this is for business owners, looking to, again, increase profits, increase efficiencies, build their companies for sale, build their companies to sell someday. I'm on Twitter. I'm not super active, but I'm semi-active on Twitter, and it's just Adam Koos, my first name, last name. Instagram, I'm probably even less active. I'm trying to get better about that. In fact, my digital marketing company that I hired and they made me set up a TikTok account, which I begrudgingly did. So they've got me
TikTok,
recording. I
you're gonna do
know.
some dances.
No, I'm not dancing. No, but they've got me doing shorts, reels, TikToks on various things. So,
Nice.
but anyway, so those are probably the best ways to reach me.
Okay, I'll make sure to put those in the description of this video. All right, so I saw a couple of questions come in. One was around maybe have you seen some of your clients that have invested in art, and do you think that's a good investment channel?
I think it can be, but art is one of those assets that is very illiquid, and one might argue that it's only worth what somebody else is willing to pay for it. So because it's illiquid, it's not exactly something you could sell right away. But I don't think it's a bad investment. No, I just think that it's kind of like I heard somebody said to me the other day. They're like, my friend is, and she said my friend is really bougie, and she loves nice things. And so she bought this Rolex the other day, and she said that a Rolex will have a higher rate of return than the stock market. And I'm like, oh my god. Oh, I'm like, first of all, I love watches. I don't own a Rolex. I'm not a Rolex fan. Doesn't matter though. But that's just false. So that's just somebody justifying buying their watch and spending too much money on a watch.
Yeah,
But there's
that's
nothing
what's
wrong with that,
like.
by the way. But so there's lots of misconceptions out there. So art, illiquid investment, probably something you want to invest in after you've already done a bunch of other things that are a little bit more probable.
What about, so here's a non-finance related question. The best car you've owned, or maybe favorite?
That's easy. My dream car was that Gen 5 Viper. So, well, Gen 1, it technically was a Gen 1, Gen 2 Viper, but I didn't like the Gen 3s or 4s. So, I was actually, it's funny, as soon as they said they were coming out with the Gen 5, I was a little frustrated because I knew I was going to want that one instead. It was going to cost me more. So, but no, I'm actually surprised how many people really like that car. I thought it was just me. But no, I just love the curves of that thing, how it looks. It's the only car I've ever owned where I haven't gotten sick of it in 8 weeks, and, even more importantly, when I walk out to it in a parking lot and I look at it like it's not mine. Like, I still don't
Yeah,
believe, and then I get to open it up and get in it, and so,
yeah.
yeah, no, it's a unbelievable. Mike said, "But come on, Adam, why do I have a Rolex?" I'm not a Rolex fan, Mike. That's not me. I like other watches, other brands of watches.
Yeah, I like Fossil watches. Probably
Yeah.
good for my financial plan.
Yeah, man, that's a true story right there. Yeah.
$50, and I'm happy. Uh,
You don't even go Movado, huh? You stick with
that's
stick
good
with the Fossil.
enough. All
Yeah,
right,
the
so here's
Apple Watch.
one. Apple Watch, I'm not even there yet.
I don't want an Apple Watch.
All right, so
You ever go to
dog
lunch with
collect.
somebody who has an Apple Watch on? They can't even focus on the conversation. They're
Oh
constantly
yeah, yeah,
anyway,
yeah.
I
I have
digress.
enough stuff pulling my attention. All right, so here's a question. Do you have anything for financial planning with trading included, or for traders?
Do you have anything
And
in
do you trade as well as invest?
Sure. I'm not sure if you wanna, elaborate on that question so I understand exactly what you mean. So, I think what you're asking is the first part of the question. Do you have anything financial planning with trading or for traders? I think what you're asking is, do we invest for our clients? The answer is yes. Very, very, very few. We're talking 2% of our clients pay us a fixed fee, where they'll pay a hard dollar cost. Like, it starts at 4,000 and just goes up from there. We had somebody going through our process right now. They've got an enormous net worth, and they're paying $45,000. But very few people do that. Most people, they want us to build the plan for them, tell them when they can quit working, tell them when they can buy their houses, their cars, go on their vacations, all the things they want to see, do bucket list stuff, toys, and then they want us to manage the portfolios for them. So, yes, Roth IRAs, brokerage accounts, IRAs, 401ks, trust accounts, everything under the sun, charitable planning, things like that. So, do I? Let's see here. And then the second part, do we trade as well as invest? Um,
I
they're
think
kind of similar in our
right. I was
industry.
thinking they're kind of like this.
When we say trading in our industry, what we mean on our side of the fence in the market technician world, so technical analysis, to me, a trader is somebody whose time frame is, say, 3 months and shorter. So a day trader would be somebody who goes to cash every day. A swing trader would be somebody who goes, they might own an investment for a few days to 3 weeks. And then a short-term trader might own for a month, 2 months, 3 months. That's it. That's a trader to me. An investor is somebody that's my time frames like 6 to 9 months, 6 to 12 months. So, my average holding is probably 9 to 12 months. But if they say if the trend is your friend to the end. So, if we own some investments that are just killing it, like Nvidia, we've owned Nvidia for a long time now, full disclosure. And it's, as long as it's going up, we want to keep owning it, and we want to have an exit strategy in place. Just like the Navy SEALs, you don't go into battle without an exit strategy. You shouldn't invest without one either. But do I recommend investing in Roth? I think Roth IRAs are great. I think you should probably, most people who are successful make enough money to where they should be deducting their income, deducting against their income taxes first. So some financial advisors, I'm going to be very careful when I say this, some financial advisors believe that you meet your match in your 401k, and then from there, maybe you invest in a Roth. Well, kind of a conflict of interest. The Roth you're going to do with them, right? And they're going to get paid for it. So, and 9 times out of 10, when a client comes in our office and we're saying, okay, where should you put your money first? 9 times out of 10, it's the 401k. Because if you're in a 20% tax bracket, or just if you're paying 20% your taxes, so between, we'll say city, state, federal taxes, your average taxes, say 20, that means every dollar you put in your 401k, having nothing to do with rate of return, making money in stocks, bonds, what have you, you're making 20% on a tax deduction. So anybody can tell you can make 20% every paycheck, put your shoes on and run fast.
Last question. Best way to get into investing for dummies?
Yeah. Well, I think that a great website is investopedia.com. It's just a wealth of knowledge, lots of good stuff, very explained in layman's terms. So that's a good place to go. I think that I'm trying to do better about our shorts, reels, TikToks, things like that, in terms of giving like short, easy to digest, simple information. We've got a podcast, a couple podcasts actually. One's for business owners called Elevate Your Business, which is the one that Will's going to be on this coming Thursday. And then he's doing a How I Built It episode, which is basically how he built his company. So you're going to learn a lot more about Will that you never know on Thursday here coming up. But the other podcast is called the Retirement Fiduciary Podcast. It's on YouTube, iTunes, or I guess it's Apple Music now, and Spotify. And so the Retirement Fiduciary Podcast, we're talking about a lot of real basic how to get started in the investing and things like that. So, but yeah, I mean, I just read books. Nothing replaces a book. If you're not a reader, like I'm not a reader, I listen to books.
Yeah,
if I read a book, I go through 2 pages and I haven't read anything. I have to read 2 pages over again.
Yeah, I'll be thinking about other stuff while I'm reading.
Yep, I don't know what's wrong with me. Yeah.
All right, so first of all, let me thank you for taking the time out to share some of your experiences, your insights, answer some of our questions. Anything you'd like to share with the audience before we kind of shut things down? Maybe if you mention where folks can follow you,
sure.
and anything else you'd like to share if folks want to do business with you.
I'll give you the follows and where to follow me and contact me, and then I'll give you I'll give you one secret. How's that? So
sounds good.
Instagram, Adam, D as in David, Koos. Twitter, Adam Koos, Adam Koos. LibertasWealth.com, ElevateAndExit.com. The podcasts are, I saw somebody ask, the first podcast is called the Retirement Fiduciary Podcast, which is on Apple Music, Spotify, and YouTube video. And then for business owners, exclusively exit planning, business transition planning, it's called Elevate Your Business, which is also on YouTube, Apple Music, and Spotify as well. And then the secret, so I'll leave you with this, and it's this is why we maybe at some point, if you're interested and if your audience is interested, we could do a part 2 because there's so much more to talk about. But what is a fiduciary? This is huge. So this is the secret. I'm not going to elaborate because, like you said, we've taken a lot of time today. If you want help with investing, with financial planning, with building a plan, and you're concerned about where to go to get that help, or you're worried about hiring the right person to help you, the right coach, the right guide, because at the end of the day, you're I'm Obi-Wan, or we in this industry, we're Obi-Wan, you're Luke Skywalker at the end of the day. So you're the hero here. But finding that right guide, that right coach, that right financial planner, financial advisor to help you, you do 90% of the research by simply going to a website called napfa.org. It's the National Association for Personal Financial Advisors, NAPFA.org. And if you put your zip code in there, where you live, it gives you all of the fee-only registered fiduciary financial advisors near you. And if you just pick one of the 2, 3, 4 of these people and interview them, you've already done 90% of the research just by picking a fiduciary, and you're going to get a lot better advice, a lot better, unbiased, conflict-free advice. So that's one secret little today.
Thank you. So
thank you,
Adam. Thanks for joining us, and to everybody watching this. The whole point of us doing this video is to just share knowledge and have people think. I think one of my favorite takeaways is just that keyword of having a financial plan, knowing what you want, where you want your life to be in the future, so that you can kind of reverse engineer that, and where you are right now and what it is going to take for you to get there. You need folks like Adam in this world, to help out. So Adam, thanks for sharing your knowledge, and looking forward to having you again as a part of our channel. Maybe we'll come over and do a walk around and review of your Viper.
Oh boy, here we go.
Yeah.
It's funny. I don't post anything about the Viper. I keep it a secret, so I'm like terrified of people finding out about this thing. But anyway,
the Viper is good, man. All right, so thanks everyone. Hit the thumbs up for me on the way out if you would. We really appreciate the support, and hopefully you got something out of this video. So if so, hit that thumbs up for us and stay tuned for the next episode.
All right, thanks everybody. Thanks, Will.
Yep, thank you.